Hello everyone, welcome to the channel. This is part 4 of the types of bank series, and in this video we will be learning about what are differentiated banks and in particular about the payment banks. Bill Gates once said that banking is important but banks are not. He tries to explain that in the technologically driven world, the role of financial institutions has evolved. The functions of banking, like managing money or facilitating the transactions or providing loans or savings, etc., etc., all such functions of banking is essential for the society. However, traditional banks are no longer the sole or even the primary entities to deliver such functions. Therefore, we also need to understand that India is a country where we have more than 140 crores of population and has vast geographical diversity with different nature of challenges everywhere. And in such situation, it is difficult for the traditional banks, that includes commercial banks or the cooperative banks or the RRBs, for the traditional banks to cater or to operate everywhere and provide all these basic functions. Therefore, the concept of differentiated banks was discussed. Initially, in the year 2007, RBI, in the technical paper on differentiated bank licenses, discussed about differentiated bank. However, that time it was concluded that India is not yet opportune for such banks. However, after 2007, in the year 2008, there was another committee, that was the Committee on Financial Sector Reforms. This committee was headed by Dr. Raghuram G. Rajan. He said that differentiated banks can be beneficial towards the financial inclusion. Therefore, the concept of differentiated banks came into discussion. Now, let's discuss what are these differentiated banks. So basically, differentiated banks are different from the traditional banks as they function in a niche segment. What does that mean? It means that they target particular kind of issues and they try to solve those problems. Now, this differentiation of these differentiated banks can be on the account of capital requirement, can be on the account of scope of activities what they do. It can also be in the account of areas of their operation. बेसिकली डिफ्रेंशिएटेड बैंक्स प्रॉब्लम्स को समझ रहा है, जैसे कि आरबीआई रिपोर्ट ने बताया कि फाइनेंशियल इंक्लूजन का प्रॉब्लम सॉल्व करने की कैपेसिटी है डिफ्रेंशिएटेड बैंक्स में या तो डिफ्रेंशिएटेड बैंक के कॉन्सेप्ट में. देयरफॉर ये जो डिफ्रेंसिएशन है, व्हाई वी आर सेइंग दीज आर डिफ्रेंशिएटेड बैंक्स, बिकॉज देयर इज सम काइंड ऑफ डिफ्रेंशिएशन फ्रॉम द ट्रेडिशनल बैंक्स. And such differentiation can be seen in the terms of capital requirement, scope of activities, and the areas of operation. We can say that this concept of differentiated banks is not actually entirely new. However, when we see UCBs or PACS or the RRBs, even these banks can be considered as differentiated banks as they operate in a localized area or as they function in the niche segments. However, these banks have limited range of services and products. We will learn about these banks in the further discussion. Now, these differentiated banks are majorly of two types, that is payments bank and the other is small finance banks. In this video, we will be learning about what are payment banks. To understand payment banks, let us understand the story. So basically around the year 2006, there were many payment wallets like Paytm, MobiWik. All such payment wallets came into existence and these wallets became very popular among people as these wallets could help in small transactions like the payment of mobile bills, the payment of electricity, etc. etc. And such applications were used by the people or were used by the population that was unbanked. बेसिकली जहाँ पे बैंकिंग सर्विसेज पहुँच नहीं पा रही थी, इवन वो लोग जिनके बैंक अकाउंट्स नहीं थे पर से, इवन सच पीपल कुड यूज these wallets. Therefore, the potential of such banks towards financial inclusion was clearly visible. So RBI in the year 2014 launched payment banks. So RBI in the year 2014 launched the concept of payment banks. Now, these payment banks are the differentiated banks, therefore the specialized types of banks. The basic idea was towards financial inclusion by providing basic savings account, remittances services, or distribution of the third party products like insurance or mutual funds. Let us understand the functions of payment banks to understand it a little better. Functions of payment banks. Payment banks can accept the deposits, only the demand deposits and not the टाइम डिपॉजिट्स. बेसिकली ये जो पेमेंट बैंक्स हैं ये सिर्फ डिमांड डिपॉजिट एक्सेप्ट करेंगे, जैसे कि सेविंग्स अकाउंट एंड करेंट अकाउंट की फैसिलिटीज़ देंगे. और इवन इफ दे आर गिविंग सेविंग्स अकाउंट एंड करेंट अकाउंट की फैसिलिटीज़, द मैक्सिमम लिमिट दैट अ पर्सन कैन कीप इन सच बैंक्स इज ₹2 lakh. When the concept of payment banks was recognized by the RBI, during that time this limit was 1 lakh rupees. However, with time the amendments have come and that limit has been changed to 2 lakh per customer. Now we need to note that such banks do not accept time deposits. Such banks cannot accept fixed or recurring deposits. Now, these payment banks can issue ATMs or debit cards to the customers. However, such banks are not permitted to issue credit cards. These banks can offer payment and remittances services that includes mobile recharge or electricity payment or buying insurance products, such services. However, these banks are not allowed to engage in the lending activities. Credit facilities ये banks allow नहीं करते हैं, only payment and remittances services में ये deal करते हैं. Now, these banks can also deal or distribute or trade on the financial products of other third parties, that is mutual funds, insurance products or pension schemes. Distribution of the third party products is allowed. Now that we have understood the functions and services of the payment banks, let us understand the restrictions that is there for these payment banks. Basically, the payment banks can offer the functions that we have seen already. However, RBI has imposed several restrictions. Like, payment banks are not allowed to lend money or issue credit cards. Also, payment banks cannot accept time deposits or fixed deposits and can only hold deposits up to 2 lakh per customer. Also, payment banks are also required to invest their customers' deposit in the government securities and or hold them with the scheduled commercial banks to ensure the security and safety of the money. Therefore, these are the restrictions imposed in the payment banks. Now, let us understand what are the benefits of the payment banks. So, पेमेंट बैंक्स फाइनेंशियल इंक्लूजन को प्रमोट करते हैं. कैसे प्रमोट करते हैं? जहाँ भी अनबैंक्ड पॉपुलेशन है, इवन देयर पेमेंट बैंक्स कैन रीच, बिकॉज ये डिजिटली ऑपरेट कर सकते हैं. क्योंकि ये डिजिटली ऑपरेट कर सकते हैं, इनका कन्वीनियंस बहुत ईजी होता है. ऑल्सो द कॉस्ट, द ट्रांजैक्शन फीस or the service charge that these banks charge is very less. Plus, whatever deposits that the customer is making up to 2 lakh, that is allowed limit, such deposits are invested in the government securities. Therefore, it is also a very good investment opportunity. Plus, these banks also tie up with the telecom services networks. Therefore, these are the benefits of the payment banks. There are the other few details about the payment banks. Let us discuss them. The registration, licensing and the regulation of these payment banks. Basically, the payment banks are registered as the public limited companies under the Companies Act. And ये payment banks को license RBI देता है. These payment banks actually need license from the RBI. And this licensing is given under section 22 of the Banking Regulation Act of 1949. इन पेमेंट्स बैंक में थोड़े बहुत restrictions लगाए गए हैं. Restrictions as we have already discussed. And primary focus है accepting demand deposits में and providing payment and remittance services में. These banks are also governed by the RBI Act and the Payment and Settlement Systems Act. The objective of such banks is to promote financial inclusion. The scope of activity of these payment banks are that these payment banks can accept demand deposits. These payment banks can issue debit cards and not the credit cards. They can offer payment and remittances services. They can also provide internet banking services. The payment banks cannot lend money. They do not deal in credit. Also, they are required to invest significant portion, basically 75% or more. They need to invest in the government securities, or they need to keep it with the scheduled banks, scheduled commercial banks. The capital requirement to open such banks is the minimum paid up capital that is required is 100 crores. Also, the CRR, that is cash reserve ratio, and the SLR, that is statutory liquidity ratio, such requirements is there and it is applicable as per the commercial banks. This is it about Payments Bank. I hope you understand the concept. If there are any doubts, please comment down below. Thank you.